All right, so we're all human, y'all. We're all human. We all know that. And being human means that we are subject to a lot of the emotions and things that humans have, which are kind of cool. Have you ever, I remember when I used to be a kid and I would watch my dogs in the morning and I'd go, oh my gosh, I wish I was my dog. They're so happy and content and warm in the house. And I'd have to go to school and I'm like, oh my gosh, they got it made. Well, a lot of times we think that, but it is good being human, right? So we got all these different things that we can do, and it's really cool. So, but being human, how does that change it? Yeah. Get it on the right screen here. This one, here we go. So us being human is a good thing, but that means we're susceptible to human emotions. Now, yesterday was a FOMO day. What's FOMO stand? Fear of missing out and all this kind of stuff. But it's actually it was a Fed day too, right? Fed meetings. And then what could they say? They're saying that we're going to increase interest rates, 3 times in the next year. We're going to slow down all this stuff. Everything that they said was bearish. Everything that they said was bearish. But then the market initially goes down and then went up big. And now today we're down big. What does it all mean for us? What does this mean for us? Well, here's what it means. News is noise. And I wrote this in our room yesterday. News is noise. That's all it is for us. News is noise. Because what we have tried to construct is an overall trading strategy that we can trade and we don't have to worry about the news. We don't have to worry about the noise. So when we come into any trading day, your thought should not be, oh no, it's a Fed day. The Fed's meeting, what could they do? Because we don't give a crap. Or I could say we don't care. We don't give a crap. We don't give a crap what they do. Right? I don't care what the Fed does. Right? So we've constructed it in such a way as we should not be worried about what the Fed does. Why? And I'll tell you why. Because here's the deal. Here's what I do know. By God, this is the United States of America. And we know that in the long run, the corporation is king. Now, a lot of people don't like that, but the corporations are kings here. Your Amazons, your Netflix, all our stuff, our Facebooks, Metas, whatever we call our Googles, y'all, they're going to be just fine, regardless of what the Fed does. Now, does that mean that they might not have a year or two where things start going down? Well, it's possible. But keep in mind, y'all, we live in the real world. You and I are realists. We realize that the individual is less than the corporation. I just hate to tell you that. That's just the way it is. And that's why everybody's bitching and moaning about working, and we're trying to, why should I be working to make the corporation rich? Well, the corporation's always going to be rich. The corporations are always going to do well in a capitalist society. I hate to tell you this, but even if we go to socialism, which we're not, the corps are going to be just fine. So then we got to say, well, what corps are we talking about here, Bob? The big guys that we're talking about. Now we're in TQQQ, which is 3X, the QQQ. Man, what are you doing? Oh, best wrapping presents in the background. Unbelievable. Because why? She's supporting the big old corporations. She went to Target today. Where else did you go, Beth? Where else did you go? She went to Walmart. She went to Ross. I think Ross is in the queues. Hold on a second. Is Ross in the QQQ? Hold on a second. I think Ross is in there. Hold on a second. Is Ross in the QQQ? Ross stores? Yeah. Yeah, Ross has around large CTF holder of Ross is the Invesco QQQ. How about that? Ross stores. So Beth supported the Ross stores. Y'all didn't know Ross was part of the QQQs, huh? Beth says she supports them about once a week. How much money did you spend in there? It better be under $10.
Today it was around 16.
She spent $16 in Ross today. That's my girl. Right? So Beth, you know, even though we may be on the brink of recession and everything, spent $16 in Ross. Well, guess what? There's another 1 million Beths out there today in the same store. All across the country doing the same thing. You know, 16 million in sales today. Just based on Beths. Now see how this works? The corporation's going to be fine. So the federal government, the Fed is not going to kill the corporation. And if they do, we all in trouble. I just want to make sure that we bring everybody back to reality today. We are not short-term people. We're in this for the long term, right? Now, that doesn't mean that we can't take money out and start living on it when we make a little money, but y'all got to keep in mind, corporation's going to be fine. Corporation's going to be fine. And in fact, even though we have had bear markets in the past, there are more up days than down days in the market. It's just the way it is. So now we got a grip with a couple of emotions. So now you've got to, here's the big problem with traders, fear. Traders have fear, but au contraire, we have developed a trading strategy that eliminates fear. It's eliminated. Why? Because on a crash, what do? We buy more, like a robot. Crash today, we down 20%. I will buy. We got algos, y'all. We are algorithmic traders. If a crash comes, we're not fearful. We buy more. If there's a 9/11 attack, what do? We buy more. If there is a COVID pandemic, what do? We buy more. If the president of the United States chokes on a chicken bone and dies, what do? We buy more. If John F. Kennedy gets shot and the nation is sent into a panic, what do? We buy more. If Abraham Lincoln is killed and while he's watching Our American Cousin at the theater, what do? We buy more. If we go to World War II and take on Hitler after the Japanese bomb us in Pearl Harbor and the markets go down, what do? We buy more. What I'm trying to tell you is there have been numerous fearful events within our lifetimes and before our lifetimes. And what has happened? The corporations have all survived and gone up. Now, that doesn't mean every corporation survives. Sears is dying. Fortunately, Sears is not in the TQQQ. And if it were, in the Qs, and if it were, based on its underperformance, the Qs would kick them out. Why? Because it's an underperformer. And what would they do? They would replace them with a company like Amazon. Now, Amazon's already in the Qs. But do we see how this works? Sears may have been in the Qs at one time. I don't know. You know, it may have been in there. But they have been kicked out. Underperforming companies are kicked out and they pick up the newest star. Amazon is the new Sears, y'all. Amazon is in the Qs. So we benefit from people shopping on Amazon. Beth, how much in Amazon have you spent? Probably just this week. God only knows, right? I mean, I may be maxed out on my credit card. Who knows? Beth's shopping at Amazon. She's shopping at Ross. She's shopping at the stores that make up the Qs. Some of y'all shop at Costco. Right? So all of a sudden, if we can relieve the fear, so let's say that, we get an island, let's say Guam gets bombed today by, let's say Guam, which is an American territory, gets bombed today by China, and the market goes down. Well, are we going to panic, sell, and be fearful? No. Why? Because if it goes down, what do? We buy more, because we know that we're going to survive a bombing by China and Guam, which is probably not going to happen. But I'm trying to say, if catastrophe strikes, we don't get scared. You and I have a plan. Now, most traders out here do not have a plan. That's why they are susceptible to fear. Fear will blow up accounts. Why? Because traders do the illogical thing at the most illogical time. So if we get bombed in Guam, what are they going to do? Most people will say, oh God, I got to get out of all stocks. I got to sell, sell, sell. No. That's when you buy, buy, buy. You got to do the opposite of the herd. Right? Herd going this way, me and you going this way. So fear has been eliminated. So if you are still experiencing fear in the market, then you've not bought into the plan. Fear in our plan has been eliminated. I don't care what the market does on a daily basis. I got a long-term outlook. Right? I've got something here that should be supporting my kids and my kids' kids. Because you and I are about 57, I don't know, 53% is technology, I guess, in the QQQs. And technology will continue to be king, much like oil and steel were the, the soup du jour of the 20th century. Technology will be the, the great place to be in the 21st century. I don't see that going anywhere for any time soon. We're in a technological age. And so we are now really heavily invested in tech. Doesn't mean that we can't have the 2000 tech bubble. Doesn't mean any of that, right? But over the long term, we even recovered from that. So if you wake up in the morning and you have fear and you have paper hands, what's paper hands? Oh, that means you sell when the things go down and you panic. You're going with the herd. We don't go with the herd. So we've gotten zero fear. So you got to ask yourself, are you fearful? If you are fearful, you've not bought into the plan. And I'm not saying that you got to buy into the plan. I'm not saying the plan works. I'm just saying that I believe the plan works. I believe that we've got a great plan. I believe we've got a plan that will eliminate fear. So no fear. All right, what's the other one? Here's the other one, y'all. Greed. So I don't want to sell when the market goes up. Why would I be selling my TQs when the market goes up? Because it's going to go more up and more up and more up. You're probably true. That's probably true. But what we do is we take a little bit off every time it goes up significantly, or the algo says, well, sell a share. Well, sell 2 shares. Well, sell 3 shares and convert it to cash. And why do we convert it to cash? Because cash allows us to buy more shares when this thing goes down. Now, so I'm down what, $1,600 today, maybe more than that now. So we're down $1,600. Let's see how much we're down now. Oh, we're down $2,000. Oh my gosh, run to the doors. No. We would have been down more, but look what happened. Something very interesting has happened. As the TQs have gone up, watch what we did. We sold 2 shares when it went up. We sold 2 shares when it went up. We sold 2 shares. We sold 3 shares. We sold 4 shares. We sold 6 shares. We sold 10 shares. We sold 5 shares. We sold 5 shares. We started out with 243 shares. Then we bought another 12. So we were up to 250, 5 shares of TQQ. How many do we have today? We had 255. Now we've got 216. 255, 216. What happened? Well, 255 minus 216. How many have we sold? We sold 39 shares. Why? We captured profits, y'all. Now, we would be down a lot more today if we had not taken profits. So if we had been a fat hog and said, hey, man, let's just hold, right? Let's don't sell anything, then we'd be experiencing a bigger thing. That's called greed. So we have a plan who says, look, let's not be too greedy. When the market goes up and the algo says sell, let's sell it. Just don't be greedy, because bulls make money, bears make money, but fat hogs get slaughtered. Bears make money, bulls make money, fat hogs get slaughtered. So we now have a plan that eliminates greed. We just do. It eliminates greed, y'all. So if you're experiencing greed, then you've not bought into the plan. Third thing, here's the third emotion. A lot of people don't add this one, but I'm going to end it. I'm going to add it. It's envy. Good Lord, Beth, eat up with the COVID. Beth, give us a little warning before you sneeze like that. Unbelievable. All right. So envy. This is where we look at our neighbor and listen, y'all. Everybody that's on Facebook or they're in the thing and they're sharing all their wins and stuff. Well, let me tell you something. They probably not sharing their losses either, right? But you see their wins and you go, oh my gosh, I wish I could be X trader because they're so good. Oh my gosh, I wish I was Tom Shoshnoff, his best things. Y'all, do y'all see Tom Shoshnoff yesterday when the market was so up? I mean, he was sitting there going, he was laughing almost till he was crying. He's down so much money because he's a perma bear and he's just down. And he's just, it's almost laughable now when they get on. But he doesn't care that his account's down. Why? Because every time one of us conducts a trade, Tom gets $1 of commissions from Tasty Words. Does he care that his account's down 30-40% this year? No, he doesn't, because he's getting dollars from us. We don't have that luxury, right? We don't have that same luxury. So you start looking at all these traders and you go, I want to be them. And then you look at, oh man, if I just done this plan. So we got the fear of missing out, right? The fear of missing out goes with envy. Oh man, I envy that trader. If I was only them, if I only had their knowledge, if I only had what all that they've got, man, I'd be ready to go. Oh man, I'm fear of missing out. I got everybody else is in Bitcoin. Why am I not in Bitcoin? I got to be in Ethereum. Well, what makes these go up? Do you have any idea what makes Bitcoin go up or Ethereum go up? Well, Bob, let me tell you, I know my friend was in Bitcoin. He made $1 million. Well, so what? You got the Bank of England saying that Bitcoin is probably, going to be worth zero at some point. Do you know what makes Bitcoin go? I don't really. I don't have any idea what it is or how it's controlled. I don't understand it. That's why I'm not in it. I don't understand it. Now, if you want to FOMO and have envy of all your brothers and sisters and aunts and uncles that are making money in Bitcoin, have at it. And I'm not saying that it's wrong to put a certain percentage of your speculative capital into Bitcoin or Ethereum or some crypto. That's fine. But what makes it go up? Here's what makes the Qs go up. Beth is buying stuff from Ross. She's buying stuff from Amazon. We use Facebook all the time. I look at Facebook ads even. We are in Netflix. I use Google, even though I keep saying I'm gonna go to DuckDuckGo or whatever it is. I still use Google. The stuff that I know how these make money. The great American corporations, and you and I are in 102 of them in TQQQ, even though it says 100. There's actually 102 in there. And every December, they take out anything that underperforms or doesn't do well, and they replace it with the new and rising tech and communication companies. Isn't that great? I'm not envy of nobody in Bitcoin and Ethereum. So you've got three emotions that our plan overcomes. It overcomes fear, it overcomes greed, and it overcomes envy. Right? That's the plan. So what do? We do what the plan tells us to do. All right. So with that said, let's look at the market. Let's see what old Mr. Market's doing today. Because it looks like it's damn big. Damn big. Let's see. So we go to our charts. Oh my gosh, the NASDAQ is down 2%. That means the TQs are down 6%. Oh no, let's get out. We've come into this thing at the wrong time. AD is going down, down, down. The AD's 173 is positive. And the market's only down 0.33. NASDAQ's down 2. Well, we're going to see days like this. So, we got a lot of stuff above us. A lot of stuff above us, not a lot below us. Well, we've got a couple pivot points below us, right? So it's going down. Big deal. All right, so then we go and we look at our little thingy-majig here, our little volume profile. Let's see what ES looks like. See if this is catching us by surprise. The market going down. Well, I'll be darned, y'all. Look where we're going. We went from oversold to fair value, and look about where it tagged it, y'all. Look, isn't that cool? Value area. See, when you look at the big picture, you're not scared, are you? Oh, the market's down 0.34, but we're still in the fair value range. We're still above the 20, 50, and 200. Isn't that cool? Now, there's a likelihood that some of these gaps may fill. What a big deal. Hoopity hoo. Hoopity hoo. We're fairly priced. All right, let's go look at that evil NASDAQ that's down 2% today, because that's probably going to catch us by surprise, isn't it? Well, let's just see. Well, I'll be dang. It just has popped out of the fair value range. It is now into the oversold range. We would expect to bounce back into here, but it's likely because it's already tested it twice. Look at this. Where did it test, y'all? I mean, how amazing is it? We draw this on the 1st of December, and these levels are still holding on the 15th, 14th. Look at this. We've got an area of support right here, and we know it's going to be an area of support. Isn't that cool? I mean, you would think I drew this chart yesterday. No, we drew this on December the 1st. And these levels still hold. So it wouldn't surprise me to see a push down to here. It wouldn't surprise me to see a push down to here. But this is oversold, and we would expect it to come back into this level. Fill in these gaps. Go back to the point of control. So when you look at it from the bigger picture, all you got to do, so many times we look at that P&L, man, and we just get scared. We're like, we got to zoom out. No. Look, we're good, baby. We're good. All right, so then we go to skew driver. What's a dang skew driver do? 5.2 is 57. 57. Let's see what that was on. 57. I didn't record it yesterday, so 16, 21 is 57. Doing exactly like we thought it would do. I said doing exactly like we thought it. Why the crap's that not filling it? Oh. Dang it. There we go. So here we go. We went to 95. That's where apparently that's where you're shooting fish in a bucket, right? Because when we get to these real extreme areas of what the market's going to go up, and the skew's coming down a little bit today. I don't know what it was yesterday, but it's coming down a little bit. We expect that. So this is kind of bullish here as well, right? Kind of bullish here. So let's close that. And you don't even have to follow the skew driver. You don't have to follow anything. Just follow the rules. So what are the rules? I will memorialize them, I promise. Well, first thing is we need to see, do we have any signals? Is anything telling me I got to sell or buy? No. Not telling me to do nothing. So I ain't got to do anything. So that's kind of cool, right? So that's the first thing. Second thing is, how is your hedge doing? How you look if we had a massive crash? I don't have to do this now. I want you to do this every day or once a week, however, you can get in front of your computer. So we've got 4 vol steps. Pump this buddy up to 15. What does ES look like? Let's see, show all. We want to hide simulation, single symbol. 20% drop. We are up. Here we are, 20% drop. We're up 91,000. Like it. What about on the portfolio? Portfolio, we're up $2,634. That could be stronger, right? Now, one thing I do need to let you know is I did a trade last night. I need to know what I did. All right, so I'm buying these 5 when it gets down to 205. Boy, that was a great call that we made. We sold 3 and we're going to buy 5. So the cool thing that happened yesterday at 12:30 at night, you remember I was going to harvest those 3 options for 20 cents. Well, I sold them. I harvested them last night. It doesn't show the field order for 30 cents. So I made my little thingamajig a little stronger because I thought today would happen. I thought today might happen, be a big down day. So I adjusted that, somewhat. But let's look at our Greeks. We've got 241 as our TQ deltas, and we're 188 overall. So we're not getting the full effect of TQQ, but that's fine. We got positive theta, which is always good. And we've got manageable negative theta. Let's go to our groups, make sure I've got everything grouped, because I did a micro trade yesterday. Because what? That's part of the plan. Now, if your account's not big enough to do one every day, what do? Well, you do them once a week, once every 2 weeks, however often you can do them. Let's see what we got here. TQQ. See, I put on one yesterday. So let's put them in a group. In 111. I don't know where we. Oh crap! Why are you not going up there anymore? Look at the. So right click. What is this? 43. Move to group. Add group. 111. Maybe 40. All right. So we got everything done. So now let's see how much buying power I got, because this is going to determine whether I close and take risk off of one of them or if I keep on going. So right now it says that my buying power is $3,700. So I can afford to do one without taking one off. Or you can say, I can take risk off. So let's see what we got here. Trade. I'm gonna make this bigger. It's easier for y'all to see in me because I'm getting old. Very large, extra large. All right, so let's make it here. So, where do I have risks that I can take off? So let's go to micros, which is where we do our 111 trade. And I mean, look at this, y'all. I got stuff expiring in one day. Am I going to take any of these off? Probably not. Could I take risk off? Let's see what we got. I'm sure I could. Let's look at our positions. Oh man, come on, roll, baby, roll. Roll, baby, roll. Where's my positions at? Way out here, and they're so protected from, look at there, less than a 1% chance of being, in the money. Isn't that great? I could close it for 10 cents, pay a little commission, but I think I'm gonna let these just expire. Look at there. I could close that one for probably 20 cents. Isn't that great? I've got to leave some long options in here. So I'm not going to close any there. Let's see if there's some here that I might could take, just take risk off. So remember, we sell these, the naked component of the 111, we sell them for around 20. So if you can get those at 50% profit, that's good, baby. Look at this. Y'all, I sold this one for 20. Look at this. Let's make sure I did. I sold it for $20. I can take this off and get a phenomenal profit. If you sell it for 20 and you buy it back for $3, y'all made a lot of money on that. But I got $3,000 in buying power. I don't have to close any of these. Now I could, even on a down day, y'all, you can close these and take. Look at this. Any one of these, I could say, man, I made my 50% profit and I've got a free hedge on with my put debit spread. I just love the 111. Oh my gosh, the 111 is good. So let's go over here. Now, since I harvested some threes over here on the other account last night, I did not do it over here. So let's see what we got over here. Is there anything I could harvest? Harvest. I think they were at 37 days that I harvested. Let's see where my shorts are here. See if I can't harvest those right there at 90. There are 9 options there too. Wow, look at that. So when those get to be 20 cents, we could take those off. Let's just make sure I don't have anything in the 64 days I can harvest. Harvest. 175. Nope. There's a 5. That's probably from a diagonal. Yeah. Nothing to harvest there. Make sure I've harvested everything. 43 days. And if you don't know what harvesting means, stay with us. You'll get it. Stay with us. It's all part of what we do. So we harvest those at about 20 cents. Those are at 80, nothing to harvest there. And finally, I got some stuff in the 36 days. Check 36 days. Okay, 75 cents. So nothing to harvest there. So we're looking good. Uh-oh, we got something at 15 days. Make sure we've harvested everything there. Just double checking. Aha! Aha! I can harvest these, y'all. Look at that. These are ready to harvest. These are at 15 cents if I buy them back, or 20 cents. So if we can buy them back at 15. They've done their job. And it should increase my buying power as well. Let's take that off. No need to leave that. Close. Buy 3 of them at 20 cents. We'll try them at 15 because we are capitalistic pigs. There we're out. See how sweet that is? And I went from 11,000 in buying power to 12,000 in buying power. No need in leaving that risk on. Now we've got some loans out there just all by themselves, doing their job. That'll probably expire worthless. No big deal. All right. So now what do? Now we do our 111 trade. We're broken records here. Same thing every day. No fear. Don't care what the market does. We just do what we're supposed to do when we're supposed to do it. So we're going to go closest to, 45, 60 days. Let's go this 46 days. Y'all know the thing. Loan put vertical. We're going to make 50 wide. And we're going to move that puppy down until it gets to be a $10 cost. Putting that on. See how far we can. Then it gets hung. Turn it. And then it gets hung. Turn it. $10 there. Now I would not sell on top of that one. Why? Because I've already got a loan there. See there? So I'm not going to sell that out. I'm not going to do that. So I'm going to go down. Can't do that one because that's still the same. So let's go down one more. And there she is. So we could do that for $9.50. Probably cost me $9.75. Any questions about that? So we're 50 wide and we want to do a put debit spread. $9.75. We're filled. And then all you got to do is say, hey, I got to go pay for that puppy. So I got to sell something for about $20. Sell something for $20. So we'll sell it 40. Ta-da! All right. So what we do now, I go to the activity tab. We go to field, and we'll do that same trade. Over here in this account. So go to 46 days, and it was the 45.30. Yeah, if y'all can overcome the fear, the greed, and the envy, you're unstoppable. Now, does that mean you're not going to lose all your money? I didn't say that. I think we've got a plan that's going to make us not do that, right? But, who knows? I'm just a black glass wearing, spam hat wearing, 9-toed son of a gun. I have no idea what I'm doing. Sell this one. That's good. So that's 50 apart, right? Buy and sell. And then we got to sell a 20. There she is right there. For 1075, let's say 1050. Make sure we get traded there. We'll do it in quarter increments. And we're good. So then we'll go put it into our 111. What is this? 44th or something? I'm gonna have to do that darn thing again. So what is this? 44th or so? Move to create 111 44th. 1 1 Ta-da. Let's go back to extra large. See, I can see better. Now let's see what our overall grace is. That should have increased my theta a little bit, which I like. So y'all see, I want y'all to be able to embrace what we're doing. So keep your theta a little bit to the positive side. Now, it doesn't have to be as positive as we once had. Theta used to be our engine driver. It is no longer our engine driver. We just don't want it to cut into our earnings. So to keep this 0 to positive, keep your vega manageable, keep your deltas somewhat positive in relation to your TQQs, right? So that all this stuff doesn't have a drag when this stuff eventually does go up. And then you just sit back and go about the rest of your day. And you don't have to watch the news. And you don't have to worry about Korea. And you don't have to worry about China. You don't have to worry about J Powell. And you don't have to worry about the Fed. And you don't have to worry about taxes. You don't, I mean, what the tax policy is, or what the Democrats are doing, or what the Republicans are doing. You ain't got to worry about any of that. Just follow the plan. The plan's very simple. We know what the plan is. You and I are hanging our hat on the fact that the companies that are in the queues are going to, over time, be the breadwinner. I think it's a good bet. Questions, comments. It's all psychology, y'all. It's all discipline. It's very little, there's two things on this thing. I mean, there's darn pen go. So there's math involved with what we do, and there's discipline. The math kind of takes care of itself. We got a spreadsheet, you know what to do every day. The returns kind of over long term should take care of themselves. But then there's the discipline. The discipline. The discipline. Coming in here every day and just grinding it out with my 111 trade, which is my new daily short put. I like it better because it gets a built-in hedge as well. And I can use this built-in hedge to help me when the market starts grinding down. It's the discipline, 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 discipline. Those of you that work out and go to that gym every single day. It was hard to start with, right? But you get it. Those of you that go to work every single day, you don't call in sick, you don't miss days, you don't just, you are a dedicated, determined, dependable employee. You just go in each and every day. You brush your teeth, hopefully every day, a couple times, right? You brush your teeth every day. The things that we do, that's just discipline. Oh, you just do it, you do it, you do it. And that's what our program is supposed to, it's discipline, discipline. And not having, Matt, the paper hands, right? If you buy into it, buy into it. Don't have paper hands. Don't worry about losing your, you just can't do that. If you trade fearful, you're going to lose money. because you're going to do the wrong thing at the most inopportune time. You are going to sell when you should be buying, and you're going to be buying when you should be selling. It's the discipline. And the discipline of this is what's hard. And that's why you hear me, when we first started out, I was so afraid that y'all would not like the discipline part. I was so afraid that I needed to show y'all all these exciting trades and all this exciting garbage. And, we traded stocks and we did DraftKings and we did, DocuSign, we were doing all that stuff. We shouldn't have been doing all that stuff. Because then we were hanging our hat on what? We were hanging our hat on one company. Can you imagine what would happen to Tesla if Elon Musk goes up in a rocket and the rocket explodes and, he's in a million pieces and, bag, and you see him shoveling him off the African desert or something, wherever can you imagine? Well, Tesla would tank. Now, there's a good chance that our TQs are going to tank as well, but you're not in that one company. You're not in that one company. What if DraftKings, is sued by the government and they're called illegal and they put them under the RICO law and shut them down? You've got that risk of that one company going down. We've got 102. Now, if you don't want to do it in TQs, do it in UPRO. That's 3x leverage S&P 500. So now you've got the 500 largest market cap companies in the United States. Hang your hat on those. What are you hanging your hat on? So if I'm wrong and technology goes down, okay, I lose. But I've made my bets. I've made my bed, and this is what I'm sticking with. So I'm honoring. I'm disciplined. Questions? Y'all can do this. Everybody can do this, right? Anybody can do this. Anybody can do this. And what I really like is my TQs are being torn up by my micros. I mean, even though we're saying that we're putting on our TQs, what's this? My profit and loss year to date on my TQs, you ready? Is $2,812. Okay, so that's my profit there. My TMLs, my bonds are $881.43. So that's good. Now I've lost $2,500 in my ES trades this year. Well, that's not too good. That's part of my hedges, right? But here's what I like. My micro trade has made $8,012. $8,012. The micros that we're doing are outperforming our TQs. And the overall total for the profit and loss year to date on the stuff that we're trading now, not the DraftKings and all the other garbage that we have, is $8,037.01. That ain't bad, y'all. I wish we'd have done that from the beginning. Hope everybody can see that. $8,012.71. So with that being said, that's where we need to keep our little things on. When our TQs aren't doing too good, our micros are. When our TQs are doing good, then some of our other things aren't good as well. But it kind of all works out, y'all. We've got built-in hedges here. We've spent enormous amounts of time talking about how great our hedges are. We've talked about how cool our little hedges look on our micros. Let's look at them again, because that is a cool little picture. Right? We like looking at our little picture here. Saying, look at this, y'all. Look at this arsenal, this whale. There's our whale. Look at it, y'all. This is a profit juggernaut if the market goes down. Profit loss at expiration, $8,622 on an account that started off at $35,000. And that's if the market goes down. We're not in that profit tent yet, really are. Where we're at here. Profit loss at expiration, $1,400. Isn't that cool? So stay the game, people. Stay the game. It's a chess match that we're playing. And the market's job is to get you to do the most illogical thing at the most illogical time. That's why people puke. I love the term that we come up with. We puke positions. We puke positions when our positions go against us. No, no, no. It's when you double down, baby. And the cool thing is you go, when do I double down? When do I buy? You've got a trigger here. You've got a spreadsheet tells you exactly when to do something. Remember we said if this goes down, we're at 155.84 now. If we go down to 152, what's it going to tell me? Nothing. Well, if it goes down to 150, what's it going to tell me? Nothing. If it goes down to 145, nothing. If it goes down to 140, nothing. It's going to tell me buy 8 shares. See, so we know that this thing is working, right? So if we're at 150 something now, if we go down to 140, I'm going to be buying 8 shares. So let it work. Let it work. Now, I think you'll be better if you will make sure that you read all of the books, all of the resources that we've posted. Some other people have posted some wonderful research into what we're doing. Read them, grasp them. If you got questions about it, ask somebody. Ask me, ask somebody, ask Ken. You know, hey, what does this research mean? What does it mean? Because we've got a thoroughly researched strategy here. It's really, 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 really good. And we embrace the down days. Oh my gosh, on a down day, I'm just closer to accumulating more shares, to building the empire. The empire. All right, good session today, y'all. Good session. Any questions, any comments? If not, I will see y'all tomorrow.